Good morning, good morning. What's up? Welcome back to another live stream here, pre-market on a Monday. Hope you had a good weekend. There's a lot of stuff happening around the world, and headlines once again kind of shaping up to be very fear-driven, which means that we are going to play out our plan from the previous couple of weeks that we have been talking about. So if you have been following along with the live streams, it's about time to start engaging with the market. Volatility is coming back, and the macro environment is shifted. As we have been talking about since the beginning of this year, the main focus of what we've been looking at has been the bond market and how it has been reacting with the movement within the fixed income portion of the US economy, and then the dollar index, which has been the backbone of also what has been keeping prices buoyed and kind of running in the upside for majority of equities. But now both of these moving up at the same time, having broken out of key levels, is going to put some pressure on equities as the macro environment becomes a little uncertain. So as you guys might know, or if you have missed it, then here's a quick recap. Last week we had a mixed signal with CPI and PPI data that came out. CPI, which is the gauge for inflation on the consumer side, and then PPI, which is the gauge for inflation on the producer side, came in with a mixed reading, causing the market to kind of sell off, but then also buy back. And then banks kicked off earnings on the Friday of last week, and that wasn't very eventful. We had a lot of banks underperforming, and we got a pretty deep sell-off on XLF heading into Friday's close. So there is a lot changing in this background of the environment, and as we know from previous cases, that when financials tend to underperform, then the entire market tends to underperform for the earnings season. So if it's my guess, then we're going to see some surprises for the earnings season that are going to come in. But at the end of the day, what really matters is the big Mag 7 and how the Mag 7 performs, right? So we'll be keeping a close eye on earnings that will be related to the mega caps to see how the market decides its intentional move. Now, the VIX has also moved higher in the past two sessions, and if you guys recall, we have been positioned with VIX calls through debit spreads, two different types of configurations, which are now slowly going to start paying out when the VIX starts to climb higher, if the S&P 500 breaks down. But right before we get into the technicals and all the planning, you just have to understand that this environment is an environment where you have to play both sides if you want to make some money. You cannot be biased, and you cannot stick in your own biasness and hope that you're going to do better, because this environment requires you to take trades on both sides of the front. Okay, so let's talk about the technicals here very quickly. Appreciate you guys tuning in. Once again, if you can, drop a like. That's all I ask for during these live sessions. So let's talk about this a little bit. I'm going to get rid of this fib for now. I see, obviously, prior to this, we've had from this top here, considering this is going to be the first wave down, we've had a 1, 2, 3, 4, 5 wave that already ended. And now we're on a 1, 2 wave, heading into the third wave, which is this wave here. The wave that we are currently moving up on. Now, the third wave in any 5-wave cycle is typically the longest wave. Now, if that is truly the case here, then what we might see is from here a peak up into breaking some of these levels that were prior resistances to create some forced liquidity engineering in order for the market to then short further down. Now, as I've mentioned last week, this entire area, the 50-55 area, all the way up into the 5115 area, is a major key support level and is a dual zone combined with the demand zone. So it's going to be pretty difficult for the market to move down and break through this, but if it does, then that's going to lead to a much larger correction. As of right now, if you look at where we are from the top, we are only at a 2% pullback. which is very normal. Up to 5% is a very normal pullback, right? And so as of right now, if you were to plan this activity, the upside trade is not really that attractive in risk reward ratio for a swing trade. If you're planning on day trading or intraday trading this, then that might give you some opportunity, but you're still going to have to kind of take this pivot to pivot as this market continues in this squeeze sideways, right? So my plan here would be that only if we do break way above at 52.50 is where I'll start to go long. And if we reject anywhere at 51.90 or 52.20, which means this level or this level, that's going to be my pivots for short entries here and here. Okay, so that's what I'll be looking at, just pivot to pivot this week, heading into another earnings season where we're going to see a lot more activity, and that's the main focus for me this week in terms of the bearish focus. And now for bullish focus, since we did get this bounce off the dual zone last week, it is imperative that we have to break above 52.23, 52.50, these two levels here for us to move even further higher. And honestly, I will not be willing to take the bullish trade here until and unless we get a break with some very heavy momentum, very heavy volume, and some kind of a catalyst along with that will move the market. So as of right now, my biasness would still be to try and catch downside moves rather than upside moves. But also this zone here is going to be a very problematic zone. Now, if we fail to break out of 51.90, this area here, 51.90, then I would also be interested to take a short, and 52.20 would be another short area for entry. So those will be the two areas. I will be looking for a sign of liquidity being created. So we want to see some kind of a fake out and then rejection move further down, kind of like how the market has done in the past, here and here and here and here and here and here and here, right? I want to see some kind of a move like that before I start to take those trades. So as of right now, nothing to really talk about here. The main problem that I do continue to see is this, which is a strong NASDAQ. And that strong NASDAQ here, which is reluctant to break below the pivot and still continues to move sideways, is going to be perhaps the most difficult thing for this market to deal with as it weakens in terms of breadth. So the NASDAQ has to reject and move further down in order for me to take a trade on the S&P 500, because this makes up a majority of the allocation within the S&P 500, right? For those of you that don't know this, or you don't understand this concept, understand that technology is the biggest sector within the S&P 500. And so when you're looking at the biggest sector in the S&P 500, you have to take into account the performance of the NASDAQ, because that is the home of majority of these tech companies, right? So if the NASDAQ's unable to break these key pivots down here, which it has now, tested for liquidity multiple times in this zone, right? You can see that obviously right in this area right here is where we are constantly getting bid up. Then I will be very reluctant to outright short the S&P 500. So it has to happen in tandem, okay? Now, some things that I've looked at, healthcare, XLV, ticker symbol XLV, looks like we saw some prime book inflows last week on this sector, but that typically takes a couple of weeks for the market to kind of catch on. But we did see, I posted the report and research reports, that we saw some buying in this sector last week according to the prime book details. So I'll be looking for a potential bounce if I can get it at around 137.40. If it doesn't, then a bounce above 140 would do the trick. As of right now, it's up 0.64% pre-market. As for XLF, we're going to get more information on this sector this week because more banks will be reporting earnings. And then energy, which is another sector that I've been watching, is coming for a pullback move, and I would be happy to potentially take a trade on this later on. So this is just something that I'm just watching for now. Then you have consumer staples, which is another sector here which is forming a very nice kind of inverse head and shoulder pattern, but it needs to move further down in order for us to do that. Now, I remember talking to you guys about this a while back, I think about 2 weeks back, about how consumer staples is one of those sectors that have been kind of underperforming the market. And it looks like the market has now just gone to revert back to the inflation playbook. What is the inflation playbook? They're basically bidding up all the main mega cap stocks, right? And stocks with good balance sheets, good financial reporting numbers, etc. So that is something that I'm looking at. If consumer staples continue to be weak here, I'll be happy to potentially take a short at $74 if we can get a rejection off that level. And that will open up obviously a bunch of other opportunities. Tesla laid off a bunch of employees, so we'll talk about that in a little second. And then you have materials, which is another bullish sector that we've been seeing for a while. Industrials, communications, this is ruled majorly by Meta. And I think this morning retail numbers came out, and it was better than expected. So potentially a bounce here on XLRE, which is your, oh sorry, not XLRE, but XRT, which is your retail ETF. But this hasn't really seen a bounce just yet. So I'll be watching that closely. Apple last week, in case you guys are wondering what the hell happened, why was Apple bouncing while the rest of the market was selling off? Well, Apple has been lagging for the past couple of weeks already. So because it couldn't move further down, it moved further up. It's almost like it had been beaten down for a while, and so when everyone was exiting positions in other parts of the market, people were looking to buy some Apple to trade this to the upside. So this will be something that I'll be looking at for maybe sideways action or a entry in a short position. What's up, T? Hey, can you look at Lulu potential bounce around 330, 324? Yes, absolutely, I can do that. Let's have a look. Okay, so whenever I see a chart like this moving further down and just in a free fall, I would absolutely not want to play the upside anytime soon, right? So always remember, when you see a chart like this, you need to understand that this is liquidity coming out of the market. What needs to happen after a markdown phase? There needs to be a distribution or accumulation that's going to happen. So there will be either a sideways movement for a little while and then a range breakout. And only upon the range breakout is where we would want to touch Lulu. It's not now. So you don't want to try and guess where the bottom is or where it can potentially bounce. It can go wherever it wants to go. Your job is not to predict where it's going to go. Your job is just to predict the outcomes when you have a proper risk assigned trade setup. So here, since it's moving further down, it's almost like you're going to be catching a falling knife. It's not a good idea to take anything here because cheap can get cheaper, and even if it bounces here, you don't have a guarantee how high it's going to bounce or where it's going to go from here. So I would stay out of this entirely. What's my take on Mara? Okay, let's see. Haven't looked at this one in a while. They are basically in the crypto space, right? They hold Bitcoins and they mine Bitcoins, I believe. I mean, I need to do more research about this, to be honest, to give you a more accurate answer. But I mean, it looks good for a potential bounce here. This is a dual zone in this area, and of course, it looks like this whole area here is kind of a potential bounce area. I would say if you're planning to go short, wait for the break below 1460, and then if you're planning to go for the breakout, then you would have to wait for at least above $20. So this would be your key pivots for downside action here and then upside action here. That's how I would play it. But remember, you need validation, so it needs to either break up bounce or break down bounce or reject like that in order for you to play it. And so this needs more time, is I think what is more important here. But you also have the Bitcoin halving, right? I think that happens this week or something, right? But that's already been priced in a long time back. So this is very heavily dependent on Bitcoin price anyway, and Bitcoin has been kind of trapping a lot. You can see a lot of liquidity was created here with Bitcoin. This was a liquidity engineering move here by market makers. Looks like they sold into a bunch of buy orders. And this usually happens when there is a skew in terms of delta for the market maker positioning. So just looking at this right here and then looking at Mara's chart would potentially lead to a bounce in the future if it can hold this level. So that's what I would say about Mara. Hope that helps. NVDA, not touching this until it breaks. Visa, pretty nice bounce. Look at this one. This is a pretty nice one, but its earnings are coming soon. Its earnings are on 23rd April. This could potentially run up until earnings. So we want to see, obviously the retail news this morning, better than expected spending on retail is also driving a bit of this gap up on Visa. So I might want to take a long on Visa here. If I can get a pullback to 276, this would be an ideal setup for me this week if we can bounce and head higher. So I'll be looking at this pretty closely for a bullish trade idea. So yeah, keep your eyes on this one. The other one is NEE. I spoke about this last week. Still watching this for a potential bounce, break above 65 and continue high. Here would lead to upside at $70 or so. So that's something you should keep on your radar. Coinbase, which is kind of been moving just on its own mind, is currently bull flagging. So you'd have to wait for this to break either way as well. PayPal. Bullish trade didn't work out, bearish trade did work out, right? So if it breaks further down below 63 is where I would short it. Right now it's terrible risk to reward ratio. Tesla, more bad news has been coming out on this one over and over again. Still in a long-term channel that has refused to break down. I think they announced they're laying off 10,000 people, which is actually good for its balance sheet. But let's see how the market reacts this week, right? McDonald's, still waiting for this one to play out. Still on my list, right? Needs to break out firmly over 270 or break below this 265 level. So till it breaks either one of these two things, I don't want to trade it. And then United Healthcare, UNH, if healthcare as a sector is able to bounce, then this might be one of the ones that I'll be looking at to play the bounce on. So if XLV can bounce, UNH makes a big percentage of that. So this one's at a pretty strong demand zone here. This entire thing is a demand zone where it's at right now. So I need it to break either above it or below it and start rejecting or moving above, and that's how I would treat this one. Amazon broke into all-time highs and did a little bit of a dance and then came back down. This has been very finicky, and honestly I'm not really liking this chart so much at this moment because it's very, very extended at this moment, right? And I'm not saying that I can't break higher. I'm just saying I don't like this chart very much. It's a lot of choppy price action. It's not directional. It's very, very volatile. It's moving both directions. I'm not really a big fan of this. So I would stay out. I personally will be staying out of Amazon. And then you have AMD, which is sitting at a key pivot as well. This one is particularly a bit problematic as well. Has to break below 162, but it's not a very clean area. Has some previous support levels here as well. Unable to catch higher highs here, so unfortunately this one is kind of going to be another wait and watch trade, right? And then another one I'm watching is DDOG, right? Nice bounce off previous support, had triple bounce situation here and broke out and is now retesting this level as support. Could make a move higher. This is a nice structural trade here. I like this from the just pure technicals where you have potential a bounce of 128 or so would lead us into the 135 or 134, which is a nice potential trade with a nice RR setup here. So this will be one I'll be watching this week as well. this is a very nice trade that can go our way. So a couple of very unique setups this week. Apple, not so much of a setup that I would want to take. Tesla's one of them that might work. McDonald's is the other one. So DDOG, Visa, UNH, Tesla, and let's see, what was the other one? Yeah, that's, and AMD, right? So these are the main ones that I'm going to be watching this week. I'll be putting it on the Discord as well, on the snipe list, through the session today. So that will be posted on the Discord. Long on Starbucks. Let's have a look. Now I know Starbucks is struggling with higher costs and very, very bad idea. See, once again, same thing, Jason. Same thing, right? When something is falling like this, don't try to look for long opportunities right away. Like, there's no reason for you to try and catch the absolute bottom. Like, I don't get it when people do this. So I get it. There's an attraction for you to try and catch this bounce at 82.43, but you have no guarantee that it's going to happen within the time window that you're thinking. I have seen stocks move like this and then consolidate for months and months and months and months before the next move. So let it pull back, let it bounce, let it do its thing, let it form its range, just like the other one. And then when it breaks and retests, then you can play either side, right? Instead of trying to catch the bottom here, then it goes further down. Then it catch the bottom here, then it goes further down. Catch the bottom here, it goes further down. You're just going to keep, throwing money on this thing, hoping for a bounce, and then it bounces like, and then you're like, oh, now I didn't even make any money on this trade. It's a loss, right? So don't do that to yourself. Just wait patiently for the situation to play out. Like this, moving further down like this, I wouldn't want to touch it, right? Repeat that on Amazon. So with Amazon, I said this price action, look at this chart. It's very overextended, number one. And at the same time, it's very choppy. There's a lot of mix of emotions here. Because mainly, this is a very heavy a very heavy capex business. That means capital expenditures on Amazon is very high. So the market's very undecided about the future of this business, therefore not rewarding the opportunity for a blast into all-time high. When the perception of cheaper liquidity or easier financial conditions starts to get better, that's when a stock like Amazon will shine. But till that happens, I'm not happy. I don't like this setup very much. I don't like the upside here. I don't like the downside here. It's just one of those that's like stuck in the middle with a lot of chop. So yeah, that's what I mean. And so just to recap very quickly, you have a potential rejection at 51.92. You have a potential rejection at 52.20. These are your two rejection levels on SPX for this week. Somewhere around in this area where we are currently heading up into, that's going to be your potential rejection. If it does reject, then expect for the market to come down from here or come down from here. Do I have interest to play the upside? Not very much so right now. Not unless I can see a clear reason to go long here during the trading session, and that has to be accompanied with a pullback, bounce, and then a move higher. Would that be 519 on SPY? Okay. Another thing, y'all gotta start using SPX 500 USD. If you're still using SPY to map out where the S&P 500 moves out, I hope you guys understand what instrument you're looking at, right? There's a difference between SPY and SPX. This is an ETF. SPY is an ETF. This is an exchange traded fund. It doesn't trade 24 hours a day. It's not an index, okay? This is only gonna show you pre-market and post-market. It trades like a stock. The index, on the other hand, is different. It opens up when futures opens up. You need to be aware of this. If you're still stuck on using SPY, I highly recommend that you start using SPX 500 USD as soon as you can, or using the S&P 500 index in general, right? Because this doesn't have any lag time between opening and closing. This is a full end-to-end picture from all time zones. Okay, but to answer your question, would that be 519 on SPY? Let me go back and check now, because I've got to see what that is. I don't use SPY, so it's gonna be, I'm gonna have to, you know, see what that level is for you guys. I don't know why my trading view is acting up today. It's so slow. Is anyone else having this problem? Trading view being really slow? 519. It's more like around 518 or 517, I would say. It's not exactly 519. It's let's just call it the gap fill. So 518. 516 to 518 is the window for rejection. Somewhere here. Potentially. If it breaks above this and starts running higher, then that kind of is going to mean that SPX wants to run from there. But it is safe to say that SPY mirrors SPX pretty well. Yes, it is. It does mirror the SPX pretty well, but you're going to lose out on a lot of key information. What I'm trying to get at is this, guys. Like, there's a big difference between using SPY, okay, for your analysis, and SPX. Very big difference. Let me explain to you why. First things first, you will not have to deal with gaps. Most of the time, the market's not going to gap on you. So you don't have to worry about gaps at all. It's end-to-end pricing. Every single candlestick has an open and close because it's session to session. It's from London session, Europe session, Asian session, US session. They are all traded on, and you can look at it from all of those sessions on one chart, right? You don't have to wait and see what happens with the gap and this and that. Another thing is that when you're looking at SPY, right, it will mirror the price action, but it's not in the way that you're thinking. You don't have as much information here, right? Like, for example, let me show you this 1 hour chart, right? When you're looking at this 1 hour chart here, right, you look at the past times it got rejected. Does it give you any information? Not really, right? Now compare that to this chart, right? So much more information. You can see the rejections, you can see the liquidity being created, you can see liquidity being bought up, right, with lower wicks, lower shadows. I hope that makes sense to you guys. But I think as a, if you're looking to become a professional trader, use the one that has the most coverage on information, rather than looking at something that retail traders are looking at that can be very funged, right? This can be very easily manipulated because everybody's looking at this. You don't get much information from here. This is just a choppy chart. Unless you're going to turn on a different type of candle like Heiken Aishi or something like that, which is going to smoothen out the moves. And that's not really going to give you much information on that neither. I see my next question would be how I trade SPX options. You just type SPX in your broker. Just so you know, it's cheaper to trade SPX options and also tax advantaged, just FYI. For me, I don't trade SPY because it's cheaper to trade SPX options, number one, and number two, it's you only pay tax on a certain portion of your options. So just note that there are differences, but you can also be looking at SPX chart and then trading SPY. Like, you could trade options on SPY. Okay, so that's another option, another way you can do things. You have your key levels, just plot them here and then take the trade on SPY. No SPX trading in Robinhood. Yeah, but you can on TD Ameritrade, and I think you can do it on IBKR too. So if you're not doing it on Robinhood, you can do SPY, right? You can trade SPY. I'm talking about charting, right? When you are charting, you should use SPX 500 USD because it's just so much more better for you. You'll be understanding things a lot more clearer. You have a lot more information to work with, right? The candles are more complete. Okay. So that's all I have for you guys today. I hope you have a great trading session. I'm gonna hop back on to the Discord, and I'll see you guys on Wednesday. Till then, if you can leave a like behind before you head out, I'd appreciate that. And yeah, I will give you more info as we get along in this market on Wednesday. Peace.